What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. In today's video, I want to do a good old-fashioned roundup on NIO stock. It's been a while since I've done one of these, and a lot of you have been asking about their current share prices, why they have been steadily falling, what is going on with the Chinese EV market, and some short-term catalysts that should inject some life into the share prices. We'll be looking at their charting, their analytics, their closeout to the year, and I'll be compiling all of their data and current analytics into one share price. We have a lot to get into in today's episode, but first, Webull has improved their promo. They are now offering 4 free stocks worth up to $3,700 when you 1 sign up, 2 open an account, and 3 deposit in at least $100 using the link in my description. You guys have been jumping all over this one. It's a complete no-brainer. Worst case scenario, you're getting like a more than 20% ROI. They have some of the best analytics in the game and are a 0% commissions trading platform. I use their app every single day. If you haven't already, make sure to hit that subscribe button. I do a ton of videos like this covering EV, tech, IPOs, and focus my investment strategy on innovative disruption. I told my subscribers to first purchase NIO shares at $7 a share. You don't want to miss any of my future picks. Smash that like button while you're down there clicking things. And without further ado, let's get right into it. Alright, so intraday NIO is in the green. However, this is obviously intraday and there could be a lot more share movement left. Now NIO is down more than 10% in just the last 5 trading days, having looked as though it was ready to break out once again. However, it yet again hit that resistance at the 49 mark and plummeted. Now this roughly $50 range has been a strong resistance line for NIO, and investors don't seem comfortable purchasing shares above the 49 threshold. Every time we reach it, we see heavy selling pressure as no short-term focused investors want to be the one that's left holding the bag. A game of musical chairs occurs, buying pressure relaxes, and valuation falls. This is an ongoing trend we are seeing more and more of in the past few weeks. We are beginning to see some nice support emerge around the $40 mark. However, this does open up a quite substantial $10 delta for valuations to bounce around in limbo. Now, there's one thing I want to make abundantly clear before we really get into things, and that is that it's completely normal for a stock to be volatile. Remember this. I see so many new investors commenting on some of my videos that NIO is now doomed, their share prices are going to fall to zero, shares are going to be worthless, blah, blah, blah. Pump the brakes on that sentiment for a second. I don't know what's brought in this massive short-term investment psychology, but my channel is strictly focused on long-term investing and patience. We need to remember how young of a company NIO is, how fierce the EV environment is, especially in mainland China, and other catalysts causing share price fluctuations. This is a marathon, not a sprint. If you are a young investor, you should be harnessing volatility, using it as an opportunity to keep your average cost as low as possible, and not something to be scared of and cause you to sell off in an emotional panic. I also want to make the point of saying that we are in a lull in the industry wide. I know a lot of investors personally that got too comfortable with the insane EV surges we were seeing earlier on this year, and I kept telling my subscribers that it wasn't always going to be like that. I saw one person comment on one of my videos that NIO was going to die down next year and only generate a measly, useless 50% yield next year. What? Only 50%? There is seriously something wrong with your mindset if you are upset with a 50% gain in valuation in 1 year's time. Just remember, that's more than 5 times higher historical YTD yields. Alright, rant over. Thank you for listening to my TED Talk. So why have NIO shares been falling? Well, threats of delisting actually have resurfaced in the past few trading days. This was mostly catalyzed by Alibaba trading under ticker symbol BABA. Alibaba has begun to look extremely oversold in an end-of-the-year sell-off focused on antitrust fronted by the Chinese government itself. They lost over $100 billion in market value. Alibaba is a major backer of Chinese EV company Xpeng, and because it is a Chinese company itself, it dragged down many other Chinese stocks, NIO being one of these. There are also constant threats of delisting as Hindenburg Research continues to create a sell-off environment left, right, and center, although it should be noted that he is a short seller and would stand to gain from this. NIO, for the first time in a very long time, has actually been trading down over the course of more than 1 month. Investors became so used to stocks only go up in terms of NIO's evaluations. However, reality has hit and we are seeing a relatively large pullback. However, should you buy, sell, or hold after this substantial correction? It should be noted that we are about 20% off ATHs, and this could mark an enticing buying window for long-term oriented investors. I want to take a second and discuss why I am personally buying shares and have been continuously doing so on dip days. On that note, if you are interested, I have begun a Patreon page. The link is in my description. A lot of you have been asking for that. I will be posting every single one of my trades in real time and posting faster and more NIO updates. So if that's something that interests you and you want to join that community, you want to support my channel, please go check that out. I'd really appreciate it. So closing out the year, we are in the trough of NIO's chart. We have seen an undulating pattern emerge, and with many fund managers typically bullish on cross-market stocks closing out the year, we can expect heavy buying pressure in the next few days. I know it sounds quite trivial to think that fund managers trying to secure personal bonuses can substantially move markets, but it's true, and historical data actually will reflect that. These managers and investors alike tend to focus on stocks that are positioned in extremely hot sectors, as these offer more volatility and more potential reward. NIO is one of the hottest stocks in this already hot market. Look for heavy trading volumes closing out the year. As we all know, NIO typically releases their delivery figures on the 1st or 2nd of each month. However, this could be as late as the 4th of January this year, the following Monday. Now, I want to talk about factors that may have influenced NIO's delivery numbers in December. First, let's hit the bullish position. There is a narrative that the automotive industry as a whole typically will see a bulging of vehicle sales in mainland China closing out the year, with either November or December being the highest sales months. That would be a tick in the bull box. However, we do know that NIO is already struggling to keep up with demand, and Li Bin has only stated that we will see the true augmentation in output capacity come to fruition by at least January. This, in case you missed it, was around 7,500 units per month. Now, whether JAC Motors is actually able to begin breaking on these kinds of figures in December remains quite unclear in the short term. However, I am personally comfortable taking the low impact risk. I do think they will be close to, if not set a record all-time high in terms of deliveries yet again. I think NIO management knows the value in reporting consecutive record-breaking delivery months. This is huge for them in that it keeps investor interest extremely high. We know the demand is there, and I think they will likely do everything under the sun to ensure the supply is there to meet the demand. Now, because I always try to remain as objective as possible on this channel, I now want to make a case for the bear position in terms of deliveries in December. Let's talk about the timing of their share dilution. The timing of this may, and that's the key word, may signify that they were unsure or unhappy with how their December deliveries were moving up to the point of the share dilution. With NIO Day approaching, we investors can likely expect an increasing share price in anticipation. So one might have logically thought it would have made sense to dilute the shares at higher valuations in the new year, sometime in 2021, after or around NIO Day. However, if management saw a lower trend line in deliveries, they may have realized that those specific valuations were potentially as good as they were going to get if they had released poor December deliveries in early January. Remember, with bad deliveries comes a falling share price typically. However, this is a ton of speculation, but I do want all your opinions on this. Let me know what you think. I do know they were essentially following suit, as many other EV companies, Xpeng, Li Auto, Tesla, were all performing equity raises, so in that sense, it does seem logical for them to do it with the rest of the pack. However, there definitely were question marks surrounding the timing. My last point, why I am remaining very bullish, is something I already hinted at, and that's their quickly approaching NIO Day slated for January 9th, 2021. We have historically seen a surging share price moving into this day, and I would not be surprised if we saw anything but moving into this specific one. I will have full coverage of their NIO Day event, so make sure to subscribe. You don't want to miss that. It's going to be a fun one. Grab your popcorn. Let's go. They are likely releasing their newest sedan model expansion plans and even potentially a 150 kilowatt hour battery pack. I do think their entire business model will largely shift after this event, and we may never see these relatively low valuations again. Remember, as I previously stated, I am strictly a long-term investor. I am focused on 3, 5, 10 years down the line and not on these week-to-week share movements. This is all noise when you zoom out. We are seeing health come back into their share prices, and I do think we will continue to see more moving into NIO Day itself. Approaching NIO Day, I would not be surprised to see share prices around all-time new highs. However, a likely pullback in the weeks following NIO Day is likely. I do indeed think we will see shares remain in the $60 range for the first few months of 2021, at which point we will have to reanalyze, see where the economy is, their delivery figures are, if the delisting fears are increasing, and how their expansion plans are amounting. However, the $60 range is more than reasonable. I wouldn't even be surprised to see 70s sometime in late January. As always, I will keep you guys ahead of the curve and in the loop, so make sure to subscribe, smash the like button for the YouTube algorithm. Do not forget about the Webull promo for free stocks worth up to $3,700 for free. That's a complete no-brainer if I've ever heard one. Worst case scenario, you're getting like a 20% ROI, if not more. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. Anyways, guys, thank you so much for the continued support. Don't forget about the Patreon page that I am releasing to get the quickest updates to you guys. The link is in the description. I will see you guys all in the next video. Take care. Happy trading. Cheers.